Hello, everybody, and welcome to your February market update. We're going to get into a little bit of where's the rates, where they're going, and more importantly, let's discuss foreclosures because it is a hot subject lately. And as always, you guys, if you ever want any copies of these slides to share with your clients or just for yourselves, shoot me an email. I'm happy to set it up. So you guys, like I said, February, let's see where we're at with it. This was a quote that I saw that I thought was pretty funny because it probably resonates with everybody. And it's I wonder if some of the consumers have worked through the 5 stages of grief with the higher mortgage rates. And that's kind of what they were dealing with. We are dealing with a lot of first-time home buyers whose average ages are in their mid-30s. They've never seen rates in the 5s and 6s, let alone teeter up all the way up into the 7s. So I think we've kind of gotten past the point of it being a little bit more of a reality at this point. This is a graph just to kind of show you where rates have bounced literally in the last few months. I can tell you that in the last 2 weeks, I have seen rates go from the mid 6s to the low 6s. And as of today, the market was not great. And it was all the way back up to the upper 6s. So it does bounce a lot in big chunks pretty fast. But hopefully what the plan is that it's going to get down to the lower 6s and kind of stabilize there come second, third, fourth quarter. What does that mean in terms of your buyers? Here's kind of an idea about the buyer demand. Now, we all know supply and demand is low as it is, right? There's more buyers than there is houses. But interest rates did play a piece of that, especially at the end of the end of 21 into 22. People were maybe pausing due to the rates. This is showing that when it's in the 7s, it's a little bit limited. But to be honest, now that it's been that year and it's kind of all come to terms that rates are just higher and going to stay here, buyer demand is strong. Like it is not stopping people from purchasing a home at all. And with us being in the 6s, I see us having no problems. I say this every single market update, and I apologize for always repeating, but the kicker is the headlines do always kind of give the scare. Right now, we're still talking about it. 67% of Americans say that their plan or they think there will be a housing crash in the next 3 years. As we have shown time and time again, lending standards, consumers being smarter in the terms of buying within a budget is far different than 08. So try to convince your buyers not to listen to those news flashes. As a personal investor, I was actually hoping to see we were going to maybe see a bunch of foreclosures or something like that to take advantage of, but it's just not happening. If you look at these news flashes, talks about how, oh my gosh, they're up so much, 115%, foreclosures are great. Here's the truth. This is a graph that shows you how many foreclosures there have been year by year. So yes, it is correct. Foreclosures are up 115% from last year. But look at what we're talking about from 08 till today, right? It doubled because what was going on in 20 and 21? The whole entire country was shut down. Do you think that there was a lot of court cases going on in terms of evicting people out of their homes when there was no jobs and they were trying to do stimulus and everything else to help the economy? Of course not. So once the economy kind of kicked back into gear in 2021, yes, there was a few more foreclosures. It doubled from 21 to 22, but we are still drastically lower and far different than we were come 10 to 13 years ago, which this shows. Let them know. We are not having a bunch of foreclosures. This is just kind of a normal range. And to be honest, it's not even normal. This is still way below. So this slide's going to show you that the average range of foreclosures is right around that, I'm going to call it $600,000 mark. So even though we've doubled, we're still at the $325,000 mark of foreclosures. We are still well below the average and have been well below the average all through COVID and essentially ever since 2018, 17, which it was just normal levels. So be aware, market is strong. We are still short on supply. There's plenty of buyers out there. Foreclosures are not going to be swinging through the door. That part is looking great. Economy is looking good. A lot of times during COVID, there was a lot of forbearance agreements, right? They were either allowing people to stop payment for a few months. They were allowing people to tack a big chunk of money to the very end of the loan, the deferment. You guys kind of all knew the programs. The huge concern out there was that this was going to then cause a bunch of foreclosures. So that once the forbearance ended, people wouldn't be able to catch it up. And if the government had not appropriately handled it, that very well could have gone. But what they did was they allowed people to stretch a little bit of the payment over every single month. Like I said, a big of them allowed the chunk to go at the end of the loan, where maybe instead of it coming to maturity in whatever, 2035, the maturity was going to be 2040. Because of them handling those forbearance and deferment agreements, it did not impact to have a bunch of foreclosures happen, nor is it going to. It was literally less than 5%. So just another reason why do not listen to the news. It's still strong. It was done great. So ultimately, handle the narrative, educate your clients, give your clients this little update so that they can see the slides themselves with the information. And here we go. To normal news, average days in the market, which most of my agents, you're going to obviously know this better than I do, but we're down end of the year. It was a little bit longer for average days in the market, but why? November, December is the holiday season. People tend to just pump the brakes on buying because they're too busy with their Christmas parties, or they don't want to list their home because they're hosting the holidays, things like that. So it is very normal, as you can see over the previous years, that always during the end of the year, the days in the market goes a little bit longer, which, let's be real, a couple of weeks isn't that long anyways. When it comes to new construction, here's kind of an update of the percentage of buyers and what price point they are buying in. Still strong. We're talking over half the percent of new homes that are being sold are all in that $300,000 to $500,000 range. In fact, I just had a continuing education class this morning where we were asking what's the average price of a first-time home buyer. And sadly, it's not really $250 even anymore. It was $150 a couple of years ago. Now you're looking at $300 plus for them to be able to find something that's of interest, and that's a first-time home. Here's total sales. This is giving you a breakdown of how many homes were sold in 2021 versus 2022. We all know 20 and 21 were crazy years. The numbers have been reduced in 22, but once again, primarily just to the simple fact of there is low demand. So because of low demand, how many properties is there that are distressed, right? Once again, I know this is a big topic about foreclosures, but it's been a big topic in the news lately, so I want to kind of address it. This is once again just showing you an example of how many foreclosures there were back in 2012 to how many there are now. So those of you that are holding out trying to get a deal, probably not going to happen. But if there are homes out there that your buyers are seeing that are just a little less desirable, maybe need a little bit of work, don't forget there is a renovation product that they can take that will help them buy the home and get cash out to do all the remodeling that they possibly want to do. So think outside the box, guys. Time for that. Home prices, once again, we're talking about how some people are seeing reductions in purchase prices right now. It is not because the market is declining. It is simply because they were either overpriced because they thought they were going to get a crazy price with where the market was going. But more importantly, just the appreciation is just slowing down a little bit. And by slowing down, I mean it's going to normal levels. You have to remember, normal homes go 3 to 5% of an increase every single year. So now we're dropping down to that, still above it, to be honest, to that 6.8% range. It'll even show you the forecast of where we're going to be going over the next year. Should get really back down to the 3%, which is great. 3 to 5% is still having home purchases be the largest net worth you can gain in your portfolio. So do not let that deter you from buying a place. I show this map every single month, you guys. This map is very orange. There was a lot of blue last month, which was showing you that the changes of the inventory were somewhere in that 15 to 30% range. Right now, once again, this is always a month behind. So that December, January data is coming in. We're showing everything is actually 15 to 30% negative in inventory. But what's the reasoning? Like I said before, it was the holidays. So people either put their listing off to not actually go live until probably February. You're going to start seeing some more listings coming up now. Or they just simply didn't want to deal with buying a new home during the holiday. So back to the positive thing after I've been talking about foreclosures forever. Once again, rates are stabilizing, going to be in the low 6s. It's a perfect time to purchase because there is going to start to be a little bit more inventory out there, but tell your buyers to get out there and get them before it starts to get real crazy for the spring and summer. In fact, the projections are that the strongest volume of sales is actually going to be occurring third quarter. So more second, third quarter versus first and second quarter. So now's the time where you can maybe not compete with a million people, maybe have a little bit of room for inspections. I have seen some seller concessions happening. So get on up, do not delay, take advantage of these 6s. And as always, I've always got various videos, informational pieces, loan products available on my YouTube channel. So feel free to scan that, check it out. You can always give me a call or shoot me a text in case you have any questions on the markets, outside the box lending, or simply just want help with getting someone pre-approved, and I can lend in all 50 states. So hope you guys enjoy the rest of your February. For those of you in the north, be safe in this lovely snowstorm we're about to get hit with. And I will talk to you in what will hopefully be a spring, beautiful March. So have a great night.